Good morning, traders. Welcome to a top quality stock TQS update. We'll be looking at the markets and some sector rotation, as well as a couple of individual stock names. I'm Richard Miller and I'll be presenting today's TQS top quality stocks. The webinar is for the March edition of TQS. In view of the recent price action in the Nasdaq, we'll start with the Nasdaq Composite here. We can see we're back above the 55-day average, which is a good thing. We generally don't want to be aggressive when the markets are below the 55-day, but the Nasdaq Composite's back above the 55-day. The recent sell-off started when the market became a little bit too extended from key moving averages, and we started to notice some aggressive selling above average volume days, and there were quite a lot of spikes of these starting to come through. The Nasdaq struggled to find support there at the 55-day, sliced through that eventually and dipped below, and then managed to rebound from the 89 period moving average. We can see very close to the back above the 89. We now need to we're back above the 55, we're back above the 21-day moving average, and now we just need to be back against the 233-day moving average. So we need to be back above these key levels to be ultra bullish. But as long as the index trading above the 55-day moving average, exponential moving average, the market rally is in good shape. We generally don't want to be below that level. Turning to the Dow. Dow's been motoring ahead, managed to rebound from the 55-day. You see a brief correction, aggressively rebounded. We've up for 1, 2, 3, 4, 5 days basically on a weekly basis. Should see a bit of a consolidation now, but this old high has a key support zone. This old rebound is a key support zone, so the Dow's doing okay. Not the best index to use for analyzing the market, but nevertheless it is one of the indices to keep an eye on. Nasdaq 100, bit of an aggressive sell-off, sliced through the 55-day averages on a heavy volume. You can see the volume spikes here. Huge volume spikes that started, and the volume accelerated to the downside, so that was adding to the risk. And then the market managed to rebound from this 144-day moving average, and that coincided well with these old highs here in November. These old highs was then a key support zone. So the Nasdaq rebounded from the key support zone. We're back above the 55-day average, critical for the market to stay above the 55-day moving average. If not, then our outlook will change back into a market in a correction. But so far the bull market rally resumes as long as the Nasdaq is above the 55-day moving average. Now, interestingly, let's look at the equal weight index. It's also back above 55-day, so that's encouraging. Now turning to the S&P 500, we can see we had a lovely rebound from the 55-day average here. The test your metal there. Got close to the 89 period moving average, but did rebound from the 55-day. That was a nice swing trade entry point for any of the index traders themselves. We're now navigating this old high to see if we're going to get past that level. It's a critical day ahead today to see if the S&P will break past that level on the chart. Now, interestingly, I looked at it earlier. If we just look at this S&P 500. And we look at the S&P 500 equal weight, and you can see the equal weight's actually already broken out. So there's quite a nice sector rotation taking place. It's somewhat healthy to see the equal weight index actually breaking out, while the standard weighted index is not broken out yet. So that's encouraging to see that the equal weight is actually moving higher on the weekly. Equal weight's broken out past the old resistance levels, whereas the standard weighting is not broken out yet. So that's encouraging to see the equal weight moving higher. Now let's go and look at the sector rotation. I've got the S&P sectors here. Basic materials. Let's sort by alphabet. Basic materials. You can see they're also nicely rebounded from key moving averages. Yeah, the 34-day moving average was a key support zone, but these pullbacks at 55, these are nice entry points into an index, for example ETF. One, two, three, four updates, 5 updays. Should see a snapback to retest that, but so far so good. Materials is now still moving stronger. Volumes looking good. We've had a few above average selling days there, but that's still looking good. So material sector is okay. Communication services rebounded nicely from significant old moving averages here. We can see the 144 day, 233 day there. So the target there would be these old highs again. Communication services, consumer cyclical, also rebounded nicely from the 55 and the 89 period moving average. We're back up to the old highs here, so it needs to break past those levels. Consumer defensive sector. Yeah, we see we also had a nice regain the 89 period moving average back above the 55 day, so that sector is okay. The upside target there is the old highs as the next key major stop. Energy been motoring ahead. We had a big rally starting here back in November, and it just moved through the 55 day. All the long-term moving averages kept grinding higher, formed a new base, broke out of that base, formed a new base on a base here, key support zone. So that's been steadily moving higher. So it's well worth looking for stocks in the energy sector. That seems to be quite strong on the energy side of things. Financial services also moving strong. Back in November also broke out, moved above moving averages. You can see a fantastic 55-day period is a fantastic place to add into the financials. There's the 1675 new support zone. Broke out this trading range recently, so these are all new support zones. So the 21-day, these snapbacks to the 21-day are nice entry points into that sector. Healthcare also rebounded nicely from the 89 144-day moving average. We can see a bit of a squeeze there. It's now back above the 55-day. It needs to maintain its momentum, and we'll see if the 233-day moving average is going to be resistance. So it needs to get back above those levels as well to be very bullish. Sorry, that's the 34-day average there. And then industrials also moving strong, broke out back in November, back above 55-day average, 55-day pullback, fantastic there. And that's also moving strong for 5 up days. New support zone, that level could snap back to see that level there, but these moving averages will give you entry points into that sector. Real estate also moving nicely, rebounded from the 55-day average here. And so far so good, back above both the 21 and the 13, so that sector is strong. So you can see all these little pullbacks to the 55-day and the 34-day are key entry points into the sector. Technology took a bit of a beating, as we know now. Sliced to the 55-day. This really looks just like the Nasdaq chart, Nasdaq 100 charts, and now it's back above 55-day. That's encouraging. Ideally, we'd want to see back above this long-term moving average there, and that's the 34-day. Actually, we need to be back above that moving average there. But steady uptrend so far. You can see these highs here, very close. These old highs here turned into quite a support zone for the technology sector. And then utilities, the last one, rebounded lovely from the 337 moving average, long term, quite sideways, slow moving, not exactly the best sector to be aggressively trading. It's more a defensive type play. Okay, but what we're looking for back, just to look back at the Nasdaq 100, and we need to see further follow through of this move. We've had a nice huge volume day there, which was good. To pity the volume wasn't higher than the previous day. So, but the market rally resumes. We've got a couple of up days, but the volume still remains a little bit on the high side. Ideally, want to see a spike like this, where the price action is up by a huge amount, 1.5–2% or more, and the volume is higher than the previous day. we need to see something like that as well, where it's kind of above the average as well. So we want to see these type spikes. We have not had that yet, so this market is still a little bit thin on the volume side to the upside, but certainly worth keeping an eye on in terms of where we're heading with the Nasdaq. Upside target are these moving averages there, and then the old highs there, 13,555. But we do need to see a bit more buying volume coming in at these levels in the Nasdaq. For the next section, we're going to run the TQS screen, easy scan here. We can see we have quite a lot of easy scans, but the one we like to look at is the TQS, where we look at earnings per share growth for the last 2 to 3 quarters, year over year, 15% growth, and return on equity more than 15%. We're also looking for a relative strength, where the index, the stocks are among the top 25 percentile ranking in the market. So we're looking for the top 20% basically. 25% in the market in terms of price performance. Okay, so if a stock starts to lag, a good quality stock starts to lag, then we will obviously exclude it when the doesn't meet that criteria. So I ran the scan here. I've got there's about, let me just move this up. There's about 61 shares in the list. There's been some sector rotation, so the list is a little bit different than the previous couple of months. And I did sort them by sector this time, so we have an idea as to what's happening on the sector rotation. And we can see technology still a little bit of a favorite one. Yeah, there's a few old names there, which some of them are starting to roll over, looking a bit thin, but we will see how they perform. Technology sector, 1 utility stocks in there. Healthcare, there's a couple of healthcare shares in there as well. And then financial services, also with raising the prospect of raising interest rates in the future, people are starting to accumulate the financial services stock. And consumer cyclical, just to capitalize on the sector rotation, and the stimulus checks is going to hit the market. There should be a few stocks benefiting from that. And then basic materials sectors also in the sector rotation. Now the way to look at these is just, we've got 61 shares. I might not go through all of them, but just we'll start with EXP. You can see this one is a strong mover. All you need to do in terms of trading strategy is you can either buy the breakouts when it breaks out of a trading range, like there's a trading range breakout there, there's another trading range breakout there, or you can just look for these kind of pullbacks to the 21-day average to trade these. Obviously your risk profile, your stop loss level is a little bit different here than buying the breakout, so you might need to accommodate for volatility if you're buying the breakout. Yeah, so yesterday was now the breakout in the stock. Trading range, and the other entry points is a little bit earlier over here. So if you keep running the screen, this one would have come up in the screen, came up earlier in the month as well. So these 21-day pullbacks, 21-day moving average pullbacks are key entry points in a particular share. So that's kind of what you're looking for. AMRX. Let me just, another basic material stock, also broke out of a long trading range. You can see it was literally flatlining for quite some time and then just took off. And you can see how these pullbacks to the 21 days, nice entry points. So keep an eye on that. There's these entry points here at the 21-day average is a kind of a key zone to look at. CLW. Hang on, let me just add the names in here. Make this bigger. I just quickly rearranged the columns, added some capitalization in, as well as the company names, so we kind of have an idea who we're talking about. Right, so let's just quickly sort them. Basic materials, IBP, installed building products incorporated. So yeah, we can see also a nice little rebound from the 89 period moving average. And now it's back above the 55-day, which is very encouraging to see. Now it needs to get past this 233-day moving average. Sorry, that's a 34-day moving average. What am I talking about? This is the 233-day average. Yeah, it needs to get back above that moving average as well. So keep that one on the watch list. Basic materials, advanced drainage, WMS. a nice little uptrend. Just look for the 55 and 21-day pullbacks as a key support zone. As you can see there, nice little rebound there. So that's one to look at. TROX also looking interesting. Yeah, it's finding support here at the 34, 21 and 13 moving average. That little cluster there, it's worth adding that one. Keep an eye on that one. Upside target would be 21 there, so that would be the resistance target to get through. So this one's looking good. It's breaking out of that trading range, these resistance levels. So it's now broken those old resistance zones. So we'll see if we can get a follow through on that move. So that one's worth adding to the list. AMRX. Also trending up nicely. You can see a huge move into the sector in December, just started the uptrend. Moving averages are still trending higher, so this is also a question of looking for these 13-day and 21-day moving average pullbacks to look at. Forterra, also similar situation. Ideal entry points, all just these pullbacks. Moving averages are trending nicely, so keep an eye on that one. Clearwater CW. I paused quickly and then I quickly rearranged the columns, and so we've got a better template to work with now. Important, I've got the relative performance as well as the money stream. Now this indicator here, money stream, looks at the price and volume action and the volume on the particular day, and if it's going up or down within the day. So it's a very good indicator to use, but in any case I've got that on as well. So I've changed the template a little bit as well as the sorting. So AMRX we've looked at, Clearwater we've looked at. Yeah, it's back above the 55 days, so that's encouraging to see. We can see these highs. Yeah, these are the old resistance levels now, so there's upside potential to those levels. EXP, Eagle Materials, very strong stock. You can see a beautiful cross above the moving averages, yeah, and then we had that 55-day moving average buy, 55-day buy, 55-day buy, and off it went. And then you had to start looking at the 21-day entry point. So when the stock's in a nice uptrend, then you tend to look for the 21-day moving average pullbacks. And now, when it gets too extended, you just wait for a snapback, but it looks like it's broken out that trading range as well, worth looking at that one. I'm going to put that high on there, so 130 should be near support, but ideally I tend to go for things that's pulling back like this to the 21-day moving average. Forterra, FRTA, needs to break out of that range. What's happening on the weekly? Yeah, a little bit extended on the weekly. It might just snap back, but you can see even on the weekly chart you can use these averages as entry points. Key support zone entry points, key support zone entry points. Now the reason why you want to buy a key support zone entry point is that your stop loss is 7 to 10%. So if you're buying up here, then you obviously have a stop loss that's close to a support level. So you don't really want that. You want a stop loss a little bit below a key support level in case it sells off to that level and then it rebounds from there. So you want to prevent being stopped out unnecessary. This one well worth looking at. A bit extended on the weekly. Daily we need to see if it's going to break out of this trading range or pull back to this zone here. We can make these levels a cluster of support there, so we'll rather look at it at the 2187 zone. IBP, another basic material stock. You can see all these little pullbacks to the moving averages, key entry points, just pull back, now grinding higher. So still within the trading zone, where the upside 130 is the target there. So if we put this one in there, target up there, so that's kind of the trade. Downside risk is to these levels here. LPX, bit extended now. Just need to buy these pullbacks, wait for it to snap back. So it's probably gonna get snapped back to this level here when these moving average catches up to there, and that can be a nice entry point. Tronox, money stream not looking too good. Relative performance still looking good, but keep an eye on it in 1887 zone. WMS, also similar. Just look for a snap back to the moving averages. So you can put it there. Alright, Zoom is still in here, oddly enough, and that's pulling back to a significant long-term average. I think that's the 233-day here. So it's looking for really a big support zone. It's consolidated. Relative performance not looking too good, so it's worth looking at it. Let me just look at the weekly. Yeah, there's still some downside risk on the weekly, but it is fighting for significant support here at this line. This is the 655 week moving average now, so that's quite a long one. So worth looking at it. Starting to look for encouraging signals here in and around this 325, this zone. Upside targets 425, 448. So might have a little bit of weakness when the opening reopens, and then people might think Zoom won't be used that much. So there's the downside risk in that. Okay, Century Communications, Consumer Cyclical Sector, CCS, also a bit extended, because see, yeah, you just keep buying back at these 55-day moving average pullbacks or the 21-day moving average pullback. So I would think it might just snap back to these zones, dip back in there, and then trade it from there, that level. CWH, also a little bit extended now. DHI just breaking out, trying to break out of this very long consolidation base. Now we like the long bases because this is like a double bottom breakout. Let's just put the lines in. Yeah. So that's kind of a base. It's trying to break out, just broken out of that base. This is a double bottom, 1, 2, 3 legs. This almost looks like a huge cup and handle breakout. So if you're trading the breakouts, this would be kind of in that breakout zone. Will be interesting to see if we're going to get a follow through of this breakout today. So worth looking at that. Otherwise it might just snap back into this base, and then by that time, when the 21-day average is picked up to the 81, 82 zone, that can be a nice entry point. But it's trying to break out of a base there on the weekly. Interesting, the daily weekly price almost looks the same. Yeah. But DHI looking good. There was a traditional money stream buy back down here after this rebound. So if you're not trading the breakout, just wait for any stock pulling back to the 55-day, and then when the volume comes through, you can see big up down volume. The money flow indicator is moving higher. You've also got starting to relative performance versus the S&P is starting to look good, and so at 1, 2, 3, 4 buying rules on DHI to follow. So that's very well to very good strategy to have. GRBK also rebounded from this really long-term moving average back above the 55-day. These all highs is the next resistance targets in these. So you can see there's a whole cluster of resistance that it's going to have to deal with when it gets to these levels. LGI Homes, huge move, fantastic rebound. Yeah, this one didn't give you a day or two. You literally had to get in on the second day there. Your money stream indicator popped, the relative performance indicator popped, the volume popped, rebound from the key 144-day moving average, rebound from old support zone here, broke past the resistance. So we kind of missed this one. But that's kind of your strategy, where you look for these 144-day, 55-day pullbacks. What's the volume at that time? Is the volume starting to pick up? Huge move. Now it can snap back and consolidate this move, so we can see it just pull back to those levels. Let's see it. Weekly, just broke out of a weekly base. So if you're looking off the weekly chart, just broken out of a huge sideways consolidation base, so we should see a follow through of this move. So keep an eye on that one. Definitely going to flag this one as something to look at. Lumber Liquidators, LLL, also rebounding fantastically from this bottom moving average. So there's upside potential to this 34-day moving average, 89-day moving average. That's the first level to look for resistance. So it should be easy pickings up to there. And then these highs here are the upside resistance targets for it, where it should get to. Now looking at the weekly is a huge cup and handle here. This is the bottom in the handle trade. You can see it's had its heyday some time ago. So it's probably quite a recovery play at this point in time, with upside targets of these 34. But interesting also from a Fibonacci perspective, you have a huge rally, and then it looks like it's a 38% retracement if you just look at this drop from here and that high and low. So that's quite a nice pullback on a weekly chart. So keep an eye on that one. MHO Homes also broken out. Look at the weekly. You can see broken out of this base. There we go. So this is on its way up now. Now the idea is just to trade these pullbacks to the moving averages, so it needs to get past that level there. Volumes, relative performance, there was a buy signal down here. You can see how quickly it had to act for 55-day pullback, and then the volume comes through, relative performance comes through. Okay, I don't want to go through all the stocks, it'll take the whole morning, but this is kind of the process you follow, looking for something. Gap down, gap's going to be filled. Money stream not looking good yet. NXST very extended now, had a nice rally, but look at these 21-day pullbacks are nice entry points. There was 3 trades there on that way up, but extended now, so it should snap back. That come to test that. So I'd be much rather buying it when the 21-day gets to that one level there, but that's moving ahead. Next Star Media, Overstock. Found support at this long-term 233-day moving average, back above the 34 and 89. Why do I keep saying 34? 89-day average. That's a 34 there. 55-day, 21-day. There we go. So rebounding nicely. Upside target there is this one here. Okay. And that one there. So relative performance signals down here, and rebound from the long-term moving average, secondary signal, and now we just need to see a money stream signal to come through. We've not yet had that when the actual volume picks up. Volume looks a bit light there, so but I'll keep that on the watch list. Liberty Interactive, also nice rebound. Resistance is the top end here, so that's going to be the upside there. What does the weekly say? Yeah, it's getting close to, so 16 should experience some form of resistance there. Volume is not nice. I didn't particularly like this one from a volume perspective. Yeti Holdings, consumer cyclicals. This one moved ahead, rally 21-day and the 13-day 13-week moving average is key entry points. Look at that beautiful rebound from that long-term average, 144-day rebound. It literally doesn't give you much time in the day to trade those, so you literally have to be very quick in after that type rebound. It's struggling to get past the moving average here, but if it keeps sustained rally back above there, ideally you'd like to see the money stream indicator come through there and pick up. So we do need to see a buy signal there, but your relative performance buy signal was back here. And there was another one there. Upside targets are these 79 moves. But extended, but pulling back. Ideally, we would not see this moving average pull back to that level. This is Senna Foods Company. Market cap of 588 million, small company basically. United Natural Foods also moving higher. There's a resistance zone there. Took that out. Now that's a new support zone. Don't like that gap there, but let's see what the weekly is telling us. Yeah, a little bit extended now. Wait for the pullback. It should pull back 50% there. Could look at that from that point of view, but now the trend is changing. It's trying to get back to its old base, so keep an eye on that one, but extended from a shorter term swing trade perspective. Axos Financial, very strong stock. You can see back here in November, this one just kept on having pullbacks to the 21-day moving average. Steady uptrend. You just need to get your timing right with this one. Just wait for these 21-day pullbacks. So you can see all the financial services one, all really motoring it, as well worth keeping an eye on that, on those stocks, and just buy these pullbacks as it gets to the 21 day or the 55-day moving average. There's the resistance. This is going to break out of this base. You can buy this at 64, 65, and then look for it to break out of that level there. Money stream buy signal came, relative performance buy signal came, rebound from the 55-day signals there. Weekly, this is up, and now we need to see a breakout above that level if you're buying the breakouts. Otherwise you can trade it up to that level. So I'm going to flag that one. PFSI, PJT Partners, financial services company as well. Huge move, old highs is support now. 55-day pullback, 21-day, 34-day pullback, 21-day pullback. So we'll see if that one can get to maybe there. That's a key zone there. So that one's pulling back nicely. Breakout. Money stream's a little bit negative here, so we haven't had the money stream signal there, but relative performance is there. But that's the weekly chart. We can see the daily rebounding from these moving averages. Need to get back above that 89 period moving average. So far so good. 55. We need to regain the 55 average there, so I'd say that. Look at it from above 71 kind of zone. World acceptances. Also this little gap here, so it needs to get past that level, but you can see how these 21-day moving averages are key entry points. So we've covered most of financials, healthcare, Apollo Medical. These 21-day averages are key entry points, but extended now. AMRX, quite volatile, very choppy, trying to get back. So you can see these ones are really bombed out and now starting to recover. So it will be interesting to see where this one from $6, where will it get to. It's the old highs here, so that would be the target. Money stream, volume's not looking good, yeah. So, but I'll keep an eye on that one. Ensign, really strong move, fantastic rebound from key moving averages. A little bit extended. You can see forming a new base up here. Traditionally, if you're buying the base breakout, you'll have to wait for it to break past these levels. That cluster, so it's going to get past there. Beautiful rebound, 55-day average, so that's a lovely entry point. Relative performance signal came here at the bottom, money stream signal came then, rebound at 55, so that's a nice little trade. So it's going to go grind slowly higher. You might see a little bit of volatility in around these breakouts, but I would flag Ensign. The pennant PNTG group, rebounding from the old moving averages, now need to get past those with big volume. Money stream that measures kind of the volume and the price action is not confirming the signal here, so keep an eye on that one. Sage Therapeutics, money stream not looking good. We don't have enough volume in this one yet. SEM Holdings gapped up past the resistance there. Now it's moving higher, a little bit extended from moving averages, so you would want to see it to snap back and maybe buy it in around these levels there when the moving average catches up. But money stream is looking good. Everything else is starting to fire on all four cylinders, so I'm going to flag that one. There we go. So this is kind of just, I don't want to go through all the shares, I'm going to keep everybody busy all day, but this is kind of what you look for. You look for those ones rebounding the 55-day. At that time, you want to see the good volume, you want to see the money stream starting to pick up, you want to see the stock outperforming the market at that time. But a stock like this, for example, all you do is just trade these 21-day moving average pullbacks as it occurs. So this one needs to get past the 160 resistance. Site 1 landscaping, also EXP real estate, also pulling back. Money stream starting to look interesting, volume starting to pick up, so keep an eye on this one. See if it's going to get back to its key levels here. Yeah, so what do weekly say? Yeah, that one's having a bit of a bummer. But yeah, so the money flow is not there yet. Applied Materials, huge, very volatile session here and huge rally back from the key moving averages. We're back above the 55-day, gapped up now. We'll see if it's going to come back to retest that 115, retest this high for resistance, but the upside target here would be this one to the top there. Yeah. money stream. I don't know why the relative performance is not coming through on this one. AMD's sold off heavily and tried to find support back here in the November low of 73. It went a little bit further down than the 80 support zone. You can see the bottom in the base here was this $75. It did test the 80. We thought it will rebound around the 80 level, but there was a beautiful rebound there now. Volume still looking a little bit choppy here. Money stream indicator has not confirmed the signal, but the relative performance have. Plus, you've got a rebound from 144-day moving average, so that's not bad. Upside targets are these bottom end of the line there. So keep an eye on that one. AMKR, a little bit extended now, but it's now starting its huge ascent. Look for the 55-day to pull up to this level here, so that might be a key zone for getting into it. But the gap, the gap's closed, so after the breakout is a snapback. That's a beautiful entry point, is this 34-day average pullback in this case, and the 55-day, so that's within a kind of trading zone. Digital turbine struggling. I suspect this one's a bit extended on the weekly, so quite extended on the weekly chart. ATN networks, double bottom kind of base here. Weekly, this one's breaking out. Volume starting to show some interest in the stock, but here we go, flatlining 55-day, flatlining 34-day. We need to see the 21-day average there come back above 34. So yeah, so this one should have a rally up until about this high. So flag that one. Okay, so another one rebounding from the 144-day average here, so that's quite good. 89-day average is that one there, and the 34, that one there. So this one should starting to move higher. Money streams just about signaling relative performance, just about strong there. Upside target there would be this 44 zone, this resistance there, 44. So Bloom Energy Corp, flag that one. CALX also nice up in what we call a staircase now as it rallies like that, and all we do now is just look for these pullbacks to buy. So there, that level would be that zone there, snap back to 43 to buy. Money streams looking okay, relative performance looking okay. You want to see quite these little volume spikes, more up days than down days, always good. Fortinet FTNT, there we go, there we go. So this one's our base breakout. It's broken out of the base, could snap back to 175, 180, and then move higher from there. But that one's moving strong, motoring ahead, so that's looking good for a snapback after the breakout. Logitech struggling a little bit, but managed to find support at this moving average here, 144-day moving average, then broke through the 89-day moving average. Now it's looking at the 55 days, the target there. All highs there would be the ultimate target, but we need to see it to get back above the 55-day average, so ideally you want to see it there. Money streams not come through yet, but relative performance have, so, or has. Right, Empower, monolithic power. Lovely 144-day moving average test there, so that was a key entry point, swing trade there. Money stream starting to come through. Volume is a bit light here. You can see a very low volume. We need a little bit more volume, and the relative performance is starting to look interesting. So yeah, we have upside targets of the 55-day average, and then this whole high here is a key resistance zone, as well as this old high up here. So there you go. Macro Vision, MVIS, Also pulling back nicely to the moving averages. So these are key entry points, swing trades there. It's now right there at 14. Upside target is this level there. Money stream we do need to see a little bit more volume. So this is a low volume stock trade. Prognon, there we go. Also rebounded nicely from the 89 period moving average back above the 34. So it's trying to resume its trend. Money stream volume hasn't really come through yet, so that's a bit of a risk. Also rebound from 55 day, that's nice. Upside target, yeah, is that old high. Money stream starting to pick up, but you ideally want to see a little bit more liquidity in this one. Teradyne TER fighting for a support here at the 144 day. Will be interesting to see if it's going to get it through to it. Upside target resistance would be these old highs there. Yeah, so that's the swing trade from these levels back up to key moving averages and then navigated through to the ultimate move there. But we've not yet seen the money stream indicators, not yet shown significant volume coming in, so keep an eye on that one. TrueCar also rebounding from major moving averages. Quite choppy trade, not exactly an ideal stock to trade, but the volume is, money stream is not looking good. Yeah, you can see it's not flowing very nicely. Ultra Clean Holdings. Yeah, lovely pullbacks to the 21-day average. Just had one recently. Now we need to see how it's going to get through these old high resistance zones. What's happening on the weekly? Yeah, we're a little bit extended on the weekly chart, so we'll have to see if this one's going to break past that level. Volume needs to come in. Yeah, so there we go. But you can see having a 55-day pullback strategy works quite well when it rebounds from these moving averages. Ultra Clean Holdings also pulling back to 55-day average, back above the 34. So far so good. 31, 32 is the upside target. Okay. So yeah, it's quite a lot of stocks, about 61 of them in the list, a little bit more than last month. I think it was 40 something. So there is a lot of sector rotation taking place. We can see the basic materials here, where we had a lot of tech before. We now a lot of basic materials. Consumer cyclical sector, that's pulling through. Financial services there, health sector, technology also still well represented in these names. But some of these, there's quite a lot of fresh new names to keep you on your watch list and monitor, and look for these when they either pull back to key moving averages like the 21-day or moving averages and 55-day pullbacks. These are nice areas to pullbacks. Watch the volume at that time. If you have this money stream indicator, check out when that starts to pick up, as well as the relative performance in the stock. But so far so good. Markets are still motoring ahead strongly, and just what we want to see for the Nasdaq, for example, is to stay above those key levels. Stay above the 55-day. That's the big picture thing you're looking for. Is the 55-day support needs to stay above the 55-day support. So the Nasdaq needs to show some strength there. The S&P is still looking okay. It's now navigating this old high to see if it's going to get past it. If not, it should pull back to the 21-day average there. And then also, where's the Dow? You can see the Dow is now broken out there. So 1 or 2 days snapback, but it's still moving ahead, motoring ahead on those trades. Now, for those of you that's trading a little bit more intraday, you can also look at the hourly and 4-hour charts in index or or a stock, for example. That gives you a little bit more quicker signals than just waiting for the end of day. But yeah, you can see the Nasdaq on a 4-hourly chart, and we had a beautiful entry point there, swing trade, when the market was rebounding from this 144-day moving average. You can see a lot of stocks will also give you that opportunity to trade the 144-day pullback. So go to a 4-hour chart and keep an eye on the stocks, or even an hourly chart if you're a little bit more shorter term focused. You can see these entry points on hourly charts. Pullbacks to moving average, gets extended, take profit. Pullbacks to moving average, gets extended, take profit. So there we go. So you get plenty of time to do the 4-hour chart as well on the markets. But what we're looking for today is a continuation, follow through with more volume on the Nasdaq. We ideally want to see a day like this where the volume market's up hugely, plus the volume is higher than the previous day. So we're not out the woods yet with respect to the Nasdaq. Until next time, happy trading.